The Reserve Bank Board will gather tomorrow for its first meeting of 2011 against a backdrop of increasing economic uncertainty. Events in Egypt have sent jitters through the world financial markets. There are also questions about whether China's growth levels are sustainable, and closer to home, the full impact of the Queensland floods has yet to be digested. Throw in a potential battle with inflation and it all adds up to another delicate juggling act for the RBA as it tries to keep the Australian economy running on as many cylinders as possible. Andrew Robertson reports.
As any shopkeeper can tell you, the Australian economy finished 2010 with a whimper rather than a bang. It's the main reason virtually no one is expecting official interest rates to rise this time around. Add to that the as yet unknown impact of the Queensland floods, and the economic waters have been well and truly muddied.
The Reserve Bank will give a fairly brief statement in terms of the Queensland floods. It will highlight the fact that the floods have had a depressing influence in the short term on economic activity, but will boost activity in the longer term with the rebuilding.
The bank is expected to expand on its flood thinking on Friday when it releases its quarterly statement on monetary policy. But Craig James believes it will be some time before the full impact of the floods is known.
The fact is that while some businesses are going to be hit hard for it, others are going to benefit. And that's what's got to be worked out when you work out the cost to the economy.
On the ground in Queensland, it's becoming clear the negative impact on the business community is going to be much wider than initially thought.
You've got civil contracting companies and earth-moving guys who work on the mines. The mines are still flooded. They can't get their gear in. So there's a lot of people who maybe didn't get directly inundated themselves, but they're now starting to come to grips with, well, our customers have, the people we supply have, and so this is becoming a very real issue for them as well.
Bigger businesses which suffered substantial damage to expensive and hard-to-replace plant and equipment are finding it more difficult to get back on their feet, whereas small business has much more ability to innovate and cut corners to get the doors back open.
Small business does have that nimble nature to it. Often they're family businesses, so mum and dad and the relatives have been able to come out and get them largely back up on their feet.
And David Goodwin says the floods have taught many of his members a painful lesson the hard way. They've discovered to their horror that they were not properly insured.
It was perhaps one of the overhangs from the GFC that many businesses probably cut costs. Maybe insurance was one of those that has now left them wanting.
Insurance, of course, has been a thorny issue in the Queensland floods, with thousands of homeowners discovering they also weren't covered, even though they thought they were. And to make matters worse, a new study from Deloitte and JP Morgan suggests all Australian households could soon be paying more for their insurance because of the floods.
The industry was suggesting that in classes such as home, we might see further rate increases coming through of 8% in 2011. I think these floods are likely to potentially put further upward pressure on those numbers, so it might be higher than 8%.
Siddharth Parameswaran believes insurance companies will not only aim to recover current flood losses, but could also look to better protect underwriting profits from future disasters.